Shanghai Composite is the only outlier, though. It's trading with gains of around 0.3%.
You're essentially looking at the 200-day, which is 23,534, and then 23,190.
6.2 is a bit of a nasty jar. The prime culprit has been food.
The sensex is down a quarter. You got the IT index, which is down about 0.27.
We are very cautious on both these names. On Zomato, we have been cautious.
They got the delivery delivery agents to ring the bell.
By 27 and 28, bulk of our capacities which we have signed will come online.
We are very confident of the business model that we have followed, that they do not contravene any of the existing laws in the country.
Right now, the Nifty is down 140 points, but it did fall below the 23,700 mark as well.
Relevance has increased significantly with those customers. That to me is the biggest marker.
Mid-caps a bigger fall, 1,200 points there, and the advance decline ratio firmly in the favor of declines.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good afternoon. You're with us here on a fresh new edition of Closing Bell. Last hour coming up. Markets are looking tough. They certainly are looking a lot redder. They were 30 minutes, 45 minutes back. We're down. We're moving down to almost a triple-digit cut once again. We were down 300 yesterday. I think the Nifty is down about 270 points. So all the market action coming up. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, good afternoon.
Hi, good afternoon, folks. What a day it's turning out to be, right? And there is serious momentum on the way down now. About a 300-point fall, and the Nifty is speeding away towards the 200 DMA. A lot of experts over the last couple of weeks told us that it will be tested, and I guess we're heading there.
Well, that's right. If you look at the ticker for the day, we started the day saying that 23,900 was breached. It became 23,800, 700. Now it's 23,600 has been breached, and they're getting into the final hour of trade. So I don't know whether the bulls have some kind of a fight back, but it appears, liquidity, the domestic support, I think, has taken a bit of a backseat in the last few days. The FIs as still were selling, but the domestic support was there. It's not that the flows aren't there, but it appears allocation has slowed down a little bit. So it seems the domestic mutual fund industry is sitting on some liquidity and they're waiting for better levels to enter. But the problem is the broader markets. On a day, you have only around 260 stocks that are advancing. That's one of the worst advanced decline ratio that we've seen in the last many trading sessions. So that's going to be a painful
almost
pocket.
10:1
Yes.
In favor of what is down right now. And by the way, for some mutual funds, Nigel, they've run out of cash in the sense that they've already deployed in the last. So if you take a look at the last 1 week, domestic, I think last 1.5 weeks, local investors, local mutual funds bought about 1 lakh crores in stock, right? Now, at least some of the smaller, not very large mutual funds, so the daily flow is there. So, you pick up 400, 500 crores. So that flow is there, but the market is also coming off. But the stock of money, what you started with, I think that is also now running low.
In fact, over the last 24 hours, I've been speaking to a lot of people, and I believe there's still more than 1.2, 1.3 lakh crore in the system. And there were 2 notable names, at least, which I'll not name, who were sitting on cash of more than 10%, 2 notable mutual funds. And I believe they are gradually chipping in, but they were the ones who were not supporting earlier. So it'll be interesting to see. As per my call, just an hour or so ago, I believe there's still more than 1 lakh crore of liquidity in the system, but deployment has slowed down. So we'll have to wait for that.
Cash on the sidelines.
Yes.
Yeah. Okay. A lot of fund houses, the average cash levels have been around 7-8%.
Yeah.
And I guess the issue is that while funds are flush with cash, you don't want to be sort of looking at portfolios which will be 5, 6, 7% lower.
Indeed.
In the subsequent immediate days. And I think that's where a little bit of a pause, wait and watch approach perhaps is coming in.
There's also the secondary flow, right? Swiggy is, I think, taken away a large chunk. NTPC Green is coming. They're raising $2 billion. So it is, of course, you've got to absorb the FI selling. And then, of course, there is all this primary market issuance, which is hitting the market as well. Well, let's just, by the way, we've crossed the 300-point cut mark on the Nifty. So it's triple-digit gains and losses, beg your pardon. So 23,574 is where we're at. Just a few levels and just a few points, on your screen. So we are fast now approaching the 200-day moving average for the market. And when I say fast, I mean really fast, right? Because look at that, 23,546 is the 200-day. We're at 23,571. So could be now, could be in the next 60 minutes that we actually test it. Nifty bank support still at about 50,500. That's essentially the channel line support for the Nifty bank. We'll see if we get to it. Real estate, metals, PSU banks, and small caps are the pockets which are seeing the maximum amount of pressure. Dollar index marching higher, and I looked at it right now before coming in. In the morning we were at about 105.8. We are slightly over 106 now. So that rise as far as the dollar, that has continued not just overnight, but through the course of the Asian market session as well. It's a repeat basically of what we saw yesterday. Day before yesterday, overnight in US session, dollar was up, and yesterday during Asian session, it was up another 0.25%. So almost deja vu. And of course, like yesterday, we got now about a 300-point cut on the Nifty, guys.
Okay, just very quickly to talk about what is down, what is up in a market like this. The issue is that nothing is up, almost nothing, and that's been the trend for the past couple of sessions. If you're looking at the Nifty right now, there are only two stocks that are managing, some semblance of green. And even there, look at Britannia. Britannia's gain is not even 0.5%. So what green are we talking about? NTPC is the other one, about 1% higher. But otherwise, it's an overwhelmingly negative screen. Now, the poorest performers or the biggest losers on the Nifty would be a Hero Moto. There's Eicher Motors, there's M&M. So auto is definitely under pressure. There's Bajaj Auto as well. And then you have a lot of metal names that are under serious pressure today. Hindalco, Tata Steel, JSW Steel, all of them are down. But it's not like the other heavyweights like SBI or Reliance are doing any better. You've got the breakup on the screen again. Let's actually get that chart back up on the screen because none of the heavyweights are contributing in any meaningful way on the upside. They're all failing to buck the trend. Yeah, that's the contribution chart. Look at that. I mean, ICICI Bank, HDFC Bank, Reliance, TCS, a lot of the heavyweights, they are all sulking together. But the bigger problem is the advanced decline ratio. I mean, look at this. What an overwhelmingly negative day. In this market, you have about 250 advancing stocks only. Look at that chart. 2,200 declining stocks.
Well, the day belongs to Swiggy.
Yeah.
On a day like this,
Mm-hmm.
that stock is seeing a lot of traction. It's at the high point of the day. The last time I checked, at least around 15 minutes or so ago.
13% up.
Indeed. Just take a look at that. That as Mangalam was telling us earlier today as well, yesterday everyone was talking about JOMO, that the joy of missing out and saying that I don't want to be part of this. Well, today that's turned into FOMO. For an issue that didn't get subscribed numerous times, the markets are in a bit of a tizzy. And this stock is up close to around 13.5% with the markets at the low point of the day. That's clearly the stock of the day. And, good on all those who got in as well. But, as you all were doing that market check, a couple of the support levels got taken out. The 50,500 mark that Prashant was talking about, that's got taken out on the Nifty. Now, 50,000 is the level that you'll be looking at. 49,000 odd, I think there is a bit of a support that comes in at that mark. So the Nifty bank has moved lower in the last few minutes or so. Just take a look at that. Nosedive, actually. Around 400-500 points got shaved off just in the last 30 minutes or so, 300 to 400 points approximately. That's the problem. And the dollar index, if you have to see a sustainable rebound, this dollar index needs to cool off from this 106.1 mark. I think if that cools off, then maybe we'll see some stability. Otherwise, it appears in the near term, this has turned into a sell on rise market. Mitesh is back with us. Mitesh, we're at around this 23,500 odd mark. It's a crucial support zone because it's a 200 EMA. And also it marks a 10% correction from the peak. How low can we go from here?
So, really two things. One, I hope that the 200 average hold, because the correction has been relentless and we are also oversold and now at a very important support level of this 200 average, which you just highlighted. Just to add to it, there was a gap on the between 24th and 25th of June, which also is at about 23,560 area. So I think that also is an important support. So two supports, oversold levels. I would hope that the markets will give a bounce back, if not a reversal from here, a strong bounce back. And the idea is that one, take profits on your short positions, at least about 75%, and trail your stop losses very, very tight if you already have short positions. If you don't have it, this is not the time to go short. wait to see how the market reacts from this 200 average level. In case we continue to decline and break below 23,490, then I think, we'll look at further shorting. But for the time being, I think, the idea is that if you have had shorts, exit and take profits over there. And if not full, then at least 3/4 positions and trail your stop loss very, very tight, because this is an area from where some kind of short covering should very logically occur.
Mitesh, I mean, if it doesn't hold, let's hope it does at the 200-day. Are we looking at a bigger? I mean, 23,200 has been. I think that's essentially the 61.8% retracement of the rise from the election day, 4th of June low to the all-time high. That is approximately 23,200. That comes into view then?
My sense is that I think, we might see further declines in case we fall below this. And my belief also is that eventually we will see that happening. The worst case scenario, which I'm penciling in, is possibly 22,500, which is where that big consolidation happened in the first quarter of 2024, starting from 7th of March all the way till about 20th, 25th of May. So I think, that consolidation is likely to be tested, but markets, as they decline and as they rally, I think they go through a sequence of higher highs and higher lows. So I think, most likely there should be an area where one low can be marked and we can look for a bounce back. But if it doesn't hold, then, as I said, below 23,490, look at least, if not shorting directly in futures, then at least take some put spread positions on the index.
What about the Nifty Bank? That is worrying me, Mitesh, because that's broken the 20, 50, 100 DMA. Now look at the 200 DMA, that comes in at around 49,600. The kind of fall that you see on the Nifty Bank, particularly in the last 30 minutes, makes me a little bit nervous, and I'll be interested to see what the FIs did today, because that's where they have bulk of their holding. What are the levels on the Nifty Bank, support levels?
For the Nifty Bank, I think the 200 average is slightly lower at about 49,725. And if you were to look at the recent historical chart, on the 6th of August, we got a close of 49,748, and on the 14th of August, 49,727. And that's where the 200 average is at. So my bet is that 49,720 should again prove to be a very important support level for the Nifty Bank. And from there, we might bounce back. So the Nifty Bank, the support is roughly about 300 points lower from here. The Nifty itself has already, tested the levels of 200 average, which for me should be an important support.
Got that. And very quickly, Mitesh, we've discussed a lot of index strategies. Stocks, anything you're trading individually, specifically?
On the stock side, so the only sector which I can possibly look at taking some long positions is technology. It's fallen off a bit, but the structure is still slightly better than the rest of the market. So in case the Nifty was to bounce back from these levels, it should be tech stocks which should lead the rally. So buy on TCS with a stop at about 4120 for targets of around 4,200, and the other one is a buy on Infosys. Is something which I would want to take a long trade. It's still trading in positive in a very weak market. So Infosys is a buy with a stop below 1849 for targets of 1910.
Okay, all right, Mitesh, got that. So playing for a counter trend bounce on the index, and IT could be that play in terms of individual stocks. Got it. We'll come back to you after a bit and take stock of where things are. But speaking of buying, the one stock that investors have chosen to buy on day one, on debut day, is Swiggy. Let's bring in Manglam. Manglam, we're talking about such somber issues over here. Let's talk about happier things, right? What a performance. And I remember the narrative going into the IPO was very negative. It's a loss-making company, not profitable. They have lesser market share than Zomato. So what happened today?
What happened today? I'll tell you two things that happened today. One, Swiggy had always left some value on the table. And second, there weren't enough takers for that value. And today, the twain met. If you look at it, it was well established that Swiggy will be pegged to Zomato's valuation, and there will be this comparison. I'll spare you the financial details, but we all know that, on a market share basis, on, the operating metrics basis, and even the quick commerce basis, Zomato is a few notches above Swiggy and some notches more than few for quick commerce, etc. as well. The question always was at what value? Because when the Swiggy IPO came in at 87,000 crores, the value that they were seeking, Zomato's market cap was close to around 2. 2.3 lakh crores, and that's exactly what it is right now as well. The discount was something that the street was eyeing. The most pessimistic analysts on the street were expecting a 50 to 60% discount, whereas the most optimistic were expecting a 30% discount. At 87,000 crores, the company left enough value on the table because then it was trading at around a 61% discount to Zomato's own market cap. So for a company which has a few notches lower operational metrics and market share metrics than Zomato, why should the discount be 60% lower was the question that a lot of people asked. And those who invested in the IPO saw an uptick at the open itself. That led to a bunch of people who did not invest in the IPO to look at that gap, and as a result of which that gap is now narrowing. If you look at the subscription to the issue as well, it was led by QIBs. HNI's just about 0.41 times. Retail, there was just about enough subscription to the offer that was made. So, there was value left on the table. There weren't enough takers for that, and today the two have met.
This is the great explanation, Mangalam. Thank you so much for that. So at 450, I'm just going back to that price chart that that Mangalam put up. At 450, as per that price chart, the discount to Zomato is 53%. That's really important to look at. This is one. Let's go back to the price chart if we can. Where is Zomato trading? It started its journey at about 370. Now it's closer to 440. So at 450, the discount to Zomato is still 53%. You're still getting Zomato 53% cheaper still getting Swiggy 53% cheaper to Zomato. And that, I think, is something that's really struck a chord with investors. It's a home run. Thank you, Mangalam, so much for that. Let's take that to our first guest on the show. Let's see if we can actually connect and talk about this going forward. In fact, before we do that, earlier today, Rahul Bothra, CFO of Swiggy, addressed the media after the company's listing. Let's listen into some of the highlights from that conversation.
Our food delivery business having turned profitable and at a very good pace of growth. It's still an early stage for India's food delivery industry. If you look at the overall size of the industry, and the online food delivery industry, there is a pretty massive scope for us to continue growing into this larger macro factors that will continue to aid that growth. Talking about the quick commerce segment, we are seeing a pretty robust consumer acceptance to larger categories, larger selection. The platforms that are currently doing a good job on speedy deliveries have to also been able to the consumers are reimagining the category in terms of what they would like to associate or want to purchase from these quick commerce platforms, and we are trying to do our best in terms of giving them more assortment, faster delivery times. So it's an exciting phase of our growth.
Okay, exciting phase of growth, says the management, and the journey has just begun. Let's welcome in Prakash Diwan into the conversation. Prakash, hi. What an afternoon, right? But we wanted to start with the good stuff, the positive stuff, and therefore the first question has to be on Swiggy. We'll put up that chart again, the comparison that Mangalam just pointed out. The discount to Zomato is still a little over 50%, even with the today's price. What would you say? I don't know where this narrative got lost, actually, frankly, while the issue was open, but the market's definitely taking note of it now.
Good afternoon, Subhi. So I wonder why we didn't figure this out when the issue was on, as you rightly said. It's just that I think there's a huge change in belief after the listing and the way it's moved post-listing. There was expectation in certain quarters that it would probably get listed at even a discount to the offer price. And if that were to happen, we would not be talking about it so charitably. But nonetheless, what people need to understand when they buy into Swiggy or Zomato is that they need to give these businesses time to catch up. I mean, you're talking about a multiple of 26, FY26 estimated sales. It's a price to sales, not price to earning kind of a this thing. So these are businesses which are expensive because of the mode, because of the time it takes, the money that it takes to set them up. And you will have to just give it more time. That's all I want to say. So when you buy into it, do it with a 3-year perspective, not with just like a listing pop and a catch-up play and all of those. So difficult times to buy into these companies, especially when the market is giving you so many opportunities on much more established large businesses which are available at such discounts. So that's from an investor perspective, yes. But yeah, it's done much better than what all of us anticipated for sure. And congratulations to the team for having such a stellar day.
Maybe after a couple of minutes, we'll get Mangalam to dive into a very interesting bull and bear on quick commerce that's playing out today, because Macquarie's put out a pretty negative view on not just, Swiggy, but even Zomato. They're, questioning the entire tenets on which the quick commerce valuations have been built. And then there are others like Morgan Stanley who are very optimistic. I thought that was a very good debate. We'll probably get that going in a bit. But before we do that, I think Mangalam's still with us to talk about another stock where the going hasn't been that great. I mean, it's not that much a high, should I say. And that is Sula. Result impact there. But Mangalam, tell us, how the numbers and valuations, the story on Sula now.
The story of Sula is that wine penetration hasn't grown at the pace at which the management was guiding. And this is the second quarter in a row where the numbers have disappointed the street. Remember, going into numbers, the stock was already down about 30-35% from its previous high. And now on disappointing on weak set or weak expectations itself, the stock is down further 5%. The company had given their second quarter update. The stock saw a correction that day as well. And now these numbers have disappointed on that as well. 1.1% decline in the overall revenue, as a result of which EBITDA fell by 24% and the net profit fell by 37%. Overall volumes declined by about 7.6% as well. We've been talking about the schism between mass consumption and premium consumption, and that's visible here as well, where the elite and premium volumes grew by 4.1%. Revenues out there grew by 7%, but mass volumes declined by a lot more, and wine tourism as well saw just a 1% growth this time around. The company cites this weakness to one, transitory slowdown that they saw in urban consumption demand, and secondly, temporary disruptions in Karnataka and Delhi. The street was hoping for some sort of optimism coming by in the second half. Out here, the management has just colored that with a little bit of caution. Why is that? Because consumer environment is still soft, and Maharashtra elections in November 2024 means that, consumption in the third quarter may perhaps not be as good as typically what third quarters are supposed to be for the spirits industry. Management is optimistic, but they've added the word cautious to that as well. The expansions will aid further impetus to H2 FY25 performance, but we're in such market where, you have to exceed expectations, not perhaps miss expectations which were anyway lower.
All right, Mangalam, try to fix the problem. I'm telling you, wine is not bad for health. At least help with the penetration, Mangalam. It'll be a good start, actually. But you're thinking about it, huh?
If you buy, maybe a couple of sips.
Let's work on that, Mangalam, on television. Yeah, cheers to that one, Mangalam. We have something to celebrate also in the next couple of months, so let's look forward to that. Thanks for that. Prakash, what about you? Not about what you prefer, but your view on, on this space and what do you like from here?
Nigel, while wine is not as bad for health, I think at this rate, even Sula Vinayas is not bad for your financial health. Okay. For the simple logic that I don't know what the latest numbers post this earnings tell us, but the price earning multiple has very softly, gradually become much more reasonable. And it should be in its mid-30s, 35, 36, I'm not too sure, on a trailing basis. But if you look at, the headwinds in terms of a theme or something which is, more secular, I don't see any reason why the wine consumption in a nation like ours will continue to remain so low. And the best part about it is that all the other businesses that have come, and very few of them are in the listed space. There's an addition of a Fratelli, in recent months that's come into the listed space. There is no other way to ride this boom that could eventually happen. But the boom is not like happening immediately. It's a very gradual build-up, which is better for the industry. I am positive on the wines and spirits segment because of the consumption pattern and the resilience that it shows. Wine is not consumed by rural consumers who are struggling, to spend. This is slightly higher end, more urban in orientation, and that will continue. So my sense is you're getting this business and you're buying into it for at least the next 4, 5, 7 years. And from that perspective, it could be very positive.
Got it, Prakash. So you believe it's not too bad for your financial health. So Sula could look fairly okay at around these levels. Prakash, I'm going to do my part on the consumption side. I'll tell you later what. But thanks a lot for joining in and giving us that quick analysis on a couple of these stocks. By the way, the Nifty Bank almost broke that 50,000 odd mark. Just a word on the Nifty Bank. Part of the sell-off could be because today as well, we have the weekly expiry. It's a final weekly expiry that we're having for the Nifty Bank. From here on, it will be monthly expiry. So, so that could add some bit of volatility. And the other problem is HDFC Bank broke the 20 DMA yesterday. Today, it's broken the 50 DMA as well. And that's the large cap name in them. The Nifty has corrected, big time from the recent peak. I think it's close to around 9 to 10% right now. From HDFC Bank's peak, I think the stock is down close to around 3 to around 4% I think. So it's been a relative outperformer just in the recent past, but that one has come in for profit taking. Slip into a short break. On the other side, we'll be joined by Vikas Jain of CLSA. He'll help us out with his take on the markets.
$320 points down on the Nifty. We're at 23,560. Nifty Bank down 1,000 points. So, you know, if you looked at the market yesterday, it was something similar. There was a 300-point cut. There's another 300 now. So, if anything, things are looking way worse. 23,560. Well, Vikash Kumar Jain of CLSA is now joining us. CLSA India's investor conference kicks off next week. It runs from the coming Monday to Wednesday. Vikash, good to have you on the program before that. So it's an interesting time to hold the conference. If you'd done the conference at the beginning of the year, the mood would have been completely different. And the mood, I reckon, perhaps will be a little different. The questions will be very different as well. Just as a market view at the conference, Vikash, what kind of questions are you anticipating? What's the kind of feedback, and what's your view really as far as how we're doing?
I would beg to differ. I think it's going to be a very interesting time to have the conference, because just our Asia conference in September, the popular complaint was, yes, valuations are quite extended, and that's really what the popular complaint was. And in the last 7 weeks, soon after that conference, in fact, because that was in September, we made a top and then we've fallen 10% as we stand today. So the valuation worry is much lesser. And while we were seeing pretty big inflows in the month of September, October was a complete washout, and it's just not stopped in November. So I think the mood in terms of flows is different. But for the other side of the argument in terms of valuation is less demanding now than what it was in many cases. It was tough to find pockets of okay valuations. Now we can find some of them. So definitely that part of the conversation will be the most interesting one that I'm really looking forward to in terms of discussing. So that's time when we can discuss some bottom-up ideas as well.
No, I want to beg to differ, because I said it's an interesting time, just in a different way. Yeah, it's a differently interesting way. Time to hold the conference. Before at the beginning of the show, Vikash, and I know you do this analysis every month, what local mutual funds have, I think, bought and cash levels, etc. I mean, you would have a real-time sense. What is the cash level with domestic funds? One worry we've heard from many, and this is not just now, actually, back in late September as well, that with with so much of FII selling plus primary markets being so hot, local funds to match up and to sort of soak up all of that perhaps is running low. Could you give us a sense of where we are at on that count, industry-wide?
See, I think, yes, clearly that has got depleted for sure with both primary market activity as well as what FIIs have been doing in terms of selling. But what we need to also appreciate is, see, this is the part which is easily available. What we need to also look at is how foreigners might be after this kind of selling. See, there was a significant proportion of funds who were not overweight India at the end of September. A lot of them, that number would have also swollen. Now, there are reasons why we saw the selling. Those reasons, in a way, incidentally, we had put out in a report early October where we said, IPO frenzy at the time when China was awakening. So we had kind of got worried about those reasons around just at the start of this decline itself. Some of those reasons are getting addressed in itself. For example, I think maybe one or two issues left, but we are getting towards the fag end of this, the bigger spurt that we saw in IPOs and the overall excitement being relatively low. A lot of, newer issues maybe not that quickly to come. So that one pressure is lesser. With whatever's happened in the US, the China part of excitement has automatically reduced into a period of uncertainty, at least till we see when Trump, after the inauguration, what he has to say. So some of those reasons which led to the initial part of the October correction are now, and we were staring at a weak set of earnings. We're coming to a close of that earnings. So the market has fallen 10%. But if you imagine what all it has digested in this 10% fall, I would say 10% isn't that bad an outcome. Yes, and sentiment, by the way, our proprietary India bull bear sentiment was at an extreme bullish point at the end of September, which was the other reason why we started getting worried on the market. That is now, although I've not checked the more recent numbers this week, but it is more clear, more towards the bearish point, although it was not at the extreme bearish point yet. Yes. So that's the other part. So sentiment has got addressed. The China competition looks lesser now in terms of flows. We've digested the earnings decline that we saw during the results. So I would say to some of those extent, a lot of that has been digested by the market with much less damage than what if I would have told you that the FIs are going to sell $14 billion in the next 7 weeks. Most likely, you would have given a much worse outcome than what we are at today.
Yeah. Vikash, hi, great to have you on, and a good day actually to be having this conversation, as good as any. So I'll tell you what, over the last 6-7 weeks since we've been in this fall, we heard 3 major reasons why FPIs could be selling India. One, as you mentioned, was this whole excitement around China, and that you explained it's kind of fizzling out now with Trump taking the White House, and we'll see what happens. The second reason that we've been hearing is money going back to the US market. The home market is looking great, and look at what's happening to the dollar, and Trump is going to make America great again and all of that. So the US market is the best to invest, so therefore pull money out of a market like India. And the third reason we've been hearing is India's going through an earnings slowdown. Address reason number 2 and reason number 3 and tell us if you think they're valid.
No, so see, all of them are valid. Reason 3 is a bit self-inflicted. Because if you see government discretionary expenditure in the first half has been very low. It's down some, I think, 7-8% if I remember correctly. For them to reach the target that they have set in the budget, they basically need to spend at a 14% YOY growth in the second half. So I think that reason partly is self-inflicted, partly also, RBI has been much more focused on inflation. So there are ammunitions for the government to do certain bits to improve that part, which is the third reason. Some of it from the government side at least can be addressed. The second reason I would say is a relatively more like a last 2-3 week outcome, more as chances of Trump winning increased and finally the news flow hit. So then with the dollar rallying the way it is going to be tough for EMs to get flows or inflows. And most likely EMs are seeing outflows, EM funds are seeing outflows. And then there is a tendency for fund managers to sell where they're sitting on profits. That is what is impacting India. That's the one part which I would say the surprise of that is also getting digested now. We are going to be in a bit of a 2-month period where we will not hear anything concrete from a president who has historically been very difficult to predict. Yes, there has been a rhetoric going into the election, but what exactly will be his policy-making style this time on is, still not something that we can be so sure of. So I think we could get into a 1.5-2 month period where perhaps some of these incremental negatives get settled down to an extent. And there's a little bit of a calm from a macro news flow perspective, which isn't going to be that bad for the markets, in my opinion.
All right. Hi, Vikas, and good to see you in, and all the best for the conference. Just looking at a note that came in around 90 minutes or so ago from DAM Capital, and they're saying that the mutual fund industry is sitting on liquidity of 5.6%, which equates to around 1.7 lakh crores. So it's come down from the previous month, but still pretty healthy. So we'll have to see their plan with regard to deployment. Vikas, I recall a couple of months ago when we chatted, and you said that you're moved out of select infra capex heavy themes, more into IT. As of now, what is your top theme that you're looking at? Oil prices have cooled off a little bit. The problem is there's a slowdown on the domestic front as well. So the top theme that you'll have.
Sure. So, I think sadly, I did run with that IT overweight for 6 months, ran it pretty well. But sometime about a month ago, we went back underweight. And I obviously underestimated the Trump impact. And that's kind of, if you think about it, whatever's happened post the president coming in, it looks like it's good for tech, it's good for dollar. That's the way to play that becomes the tech side of things. But my sense is that there is an initial kind of an excitement to this trade, and then there's going to be cool off. So that's why I would believe that some of that IT excitement will fizzle out, and that's a sector which we've started liking less in the last month or so. The areas that we are, if we think about all of this, the uncertainty that the president brings in might make us delay the rate cuts. And that's where I think if the domestic side is addressed, then some of the banks might start looking much better than others. And they are one area which are not that extended in valuations at this point of time. and where the growth part of the premium is much lesser. Since you're worried about growth in India, I think anyways the premium on growth was much lesser on many of those stocks. So that's one area which looks like a good place. Plus, towards the last 6-8 weeks, there's anyways a tendency for laggards to do very well last 6-8 weeks of the calendar year. I think that's where banks fit very well. The call that we took on instead of IT, we went overweight commodities was a bit to do with China. Now that is where things have to be seen from a slightly longer term perspective. And this is the answer of that in terms of what happens clearly in terms of Chinese policy making and the US policy making impacting China is something that we will only come to know in February or so. So there is a little bit of a period of a lull over there, because only when the first few weeks of Trump policy making is visible do we realize if it's a deal making kind of a Trump that we are seeing, who's using the threats of tariff to make a better deal, or it's really going to be that extreme tariffs that we talk about. So that's the bit that we do not know for sure, and that's something which is very difficult to predict. But that's, I think, what is going to be the defining theme of next year, because that will have a follow-on impact on India as well in terms of flows, the way that kind of comes in.
Because running out of time, so just a quick one. Reliance, you've kind of come out with this big report, and you're saying it's a great price to buy. You're saying buy right, sit tight. I think that if I got that title correct. So in 45 seconds, 60 seconds, summarize that thesis for us on Reliance. And there are always going to be, whatever the view is, overall market, etc., there are always going to be, from your coverage universe, stocks which have fallen enough and are looking attractive fundamentally, if one is willing to wait. So what are the other, say, 3-4 names, if you can outline for our viewers? Published stuff. Yeah.
So Prashant, we can't be stock specific, but I'll just tell you that is one report that you spoke about, but we have a bigger report where we are discussing the solar space and that as an opportunity. And that's the report which we have kind of come out with, and that is on that same conglomerate, but and their solar foray. In terms of names, we have a India-focused portfolio which has a reasonably good track record, and I think we have about 11 or so large and liquid names because it's a large cap portfolio. That's something where we, like I said, we are overweight banks, we are overweight commodities selectively, we are also overweight, insurance. So those are the sectors that we like in general.
Okay. All right. We'll leave it there, Vikash. Thank you very much for joining us here on CNBC-TV18. Good luck with the conference next week, and hope to speak with you maybe post the conference. You'll have much more in terms of insights and feedback from investors who are going to be here to attend that. Thank you very much. We'll take a quick commercial break here. We're going to come back, do a quick check in terms of what's happening with dealing rooms. Nimesh is going to be joining us for that. And after that, we'll get you some short-term trading ideas with the technical experts. Stay tuned.
Welcome back. At least as of now, we've defended the lower levels both on the Nifty and the Nifty Bank. Thank God for small mercies, it seems, because the 200 DMA at least has got protected. But Nimesh, he's got a proper insight into what he's picking up on the straight. Nimesh, what a day. You know, from the word go itself, there was selling. And as we speak, we're at the low point of the day. What's the feedback?
Well, absolutely, Nigel. You know, today is a brutal day as far as the broader markets are concerned. The index is down 2.5%, but there are a lot of individual names which are down 10, 12, 15, 20% as well. So clearly there is capitulation, so to speak, in the broader market stocks today. And we spoke about, you know, the crucial technical levels, right? Yesterday also we discussed about 23,800 as an important level. And the moment that got broken on the downside, we saw big selling across the board, and that's playing out in the broader markets today. From an institutional activity point of view, Nigel, the feedback is there isn't a very large FIS selling, but it's also the fact that the domestic support seems to be much lesser in today's market. And what's more important is the sentiment is clearly, you know, been very weak now among the retail and HNI investors, because of late none of them are making money either in trading or in the investment portfolio as well. So that's the overall feedback. But again, you know, from a technical point of view, Nigel, while everyone is looking at 23,800 as an important level, on a closing basis, the feedback is if the Nifty is below 23,780, which probably we are right now, there could be further selling in the broader market stock. So that's something to track over the next couple of days. Having said that, the PCR looks a little oversold, close to that 0.7, and normally we've seen, you know, around 0.6, 0.7. Market tends to bounce back. We have a truncated week this week. Also next week we have a midweek holiday. So the activity could be on the lower side, but a pullback, you know, a pullback from an extremely oversold levels is not ruled out. But clearly the sentiment has changed. And now, you know, the feedback is maybe from a retail and HNI point of view, any pullback will be looked to sold into. So you might see a bit of a pullback next week because we're extremely oversold. But again, that may get sold into. But from an institutional active point of view, while the Nifty, Bank Nifty, every indices are looking so oversold. But there is no large selling is what I understand from larger FIs today.
Got that point, Nimesh. Yeah, let's see how this goes. By the way, thank you very much, Nimesh, for the update. We did break intraday. There was a breach of the 200 DMA as well. The 200 DMA is around 23,530, 34 thereabouts. Intraday, this market has gone down to test 23,500. That extreme low that you're seeing, that is around 23,503. And there's a pullback, but yeah, we are precariously close to the 200 DMA. And the bulls will want to at least hope that that level holds. But in a market like this, what are levels anyway?
I don't know whether the tail is going to, you know, wag today. You know, tail ender, so to call it in cricketing parlance, because as we speak, the Nifty Bank in a matter of 7 to 8 minutes has recovered 250 points from the low point of the day. It plays out the weekly expiry as well. So I don't know whether the tail has got some fight in it. At least as of now, the Nifty has defended the 200 DMA. Mitesh Thakkar is back with us. Mitesh, how you placed right now? If you were short in the index, will you carry your shorts? And also if you could tell us a couple of new picks that you have.
So, Nigel, I'm not short. You know, we covered around the 200 average. We did briefly dip below that. But again, you know, the idea is that we are extremely oversold and this market is close to important support levels. No point holding on to short positions. In case there's a gap down tomorrow, we can always take a fresh long position. And I've been advocating, you know, trading or, you know, looking at some long positions on the technology side. I think that's a sector which has held out very nicely in this decline. So I think, you know, that's where I would be looking at taking long positions. So we had earlier Infosys as a recommendation. Now I think, you know, I'll suggest and TCS as a recommendation. Now I think I'll suggest HCL Tech as a VTST. Keep a stop at 1855. Look for targets of 1880 for tomorrow. In case we start getting past that, we might even look at higher levels. And the other one is a VTST on Bajaj Finserv. While the structure is weak here, the stock is at, you know, a very important support pivot of 1655. So we'll take a stop below 1650 and look for a target of 1690.
Got it. Okay. All right, Mitesh. Got that. By the way, the Nifty Bank, you know, that's calling for attention. Yes, it's the underperformer today. Yes, it's been seeing a lot of selling pressure. But I think the final weekly expiry, it seems, Prashant, there's a bit of a fight that's coming in there. 300 points in a matter of around 10 minutes, I think, or so. It went down, breached that 50,000 odd mark, making a fight back. And that's good because for the Nifty, now we're closer to around 23,600 odd. Let's see how the last 10 minutes go.
I don't know if those guys right at the low, whether they are buyers or whether they're people just covering their shorts. Whoever they are, I mean, if they're buyers especially, I would say salute to them for going out and showing the faith at this point in time.
What you need to do is just keep your SIPs going. You're in for the longer haul.
No worries.
Well, I think, by the way, today is also the day, if we close around these levels, where, the cut on the Nifty from the all-time high is going to be in double digits. So it's 10% plus now. Till yesterday it was 9 point something. You're 10 point something now with the market at about 23,600. For the Nifty Bank, it's almost 8% fall. And for the mid-cap and small-cap indices from the highs, it's about 11%. Actually, it's about 11.5% for mid-cap and 11% for the small-cap space as well. So, the flows number should be interesting. I mean, what Nimesh was saying, that there's no large number from FIIs. I mean, you need that for a day, 2 days, 3 days, because that will give sort of some courage, some belief that maybe you're at the fag end of that big FI sell-off phase. It's been one of the largest ever that we've had over the last 10 years, maybe more. So if that starts to come through, I think locals perhaps who've, of course, bought but are getting nervous will get some more himmat, so to speak. Well, as CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit. This is tomorrow, November 14th. We start at 10 a.m., a power-packed day with several panels focusing on India's economy, digital landscape, markets, entertainment, and a lot more, only here on CNBC-TV18.
Well, thank God for the small mercies. 23,600 is back here again. We almost went to around 23,500 just around 15 minutes or so ago, and we have pulled back. And the Nifty Bank, that's the one that's calling for our attention. After breaching the 50,000 odd mark, it's popped up close to around 300 points from those. I think from the lows of the day, it's up nearly around 350 points. A few stocks that should come up for you. Kotak Mahindra Bank was down 2.5%. Now that's down close to 1.5%. SBI as well has cut its losses, and big boy HDFC Bank, I think, that was as well is fighting back a little bit. Mayuresh Joshi is with us. Mayuresh, not asking you about individual stocks. You give us your idea. The markets have corrected 10% from the top. I guess it's a good time to start deploying some part of the money that you were sitting on. If you were to give me one or two stocks that you have conviction on as a house, which ones would they be?
Afternoon, Nigel. I think a couple of areas that we are probably looking at. One is obviously the agrochemical space, where the numbers have been very good. And a stock within this space, Paradeep Phosphates, has given very good set of numbers, Nigel. So the top line growth has been exceptional. The production and sales volumes have been up 5 and 7%. The EBITDA margins for the previous quarter was at 11.4%. And for the first half, at 9.7% compared to 3.7%. Now, what is really transpiring is the Kharif season has been good. The expectations of the Rabi season is equally good. And therefore, farm gate prices, as far as their key products are concerned, whether it's DAP, whether it's urea, the backward integration that they've got in terms of ammonia and the phosphoric acid components, really augur well from an earnings perspective. Net debt to equity has come down to 0.82 as we speak for the end of this quarter. And therefore, I think the earnings growth looks on a very solid trajectory for a stock like Paradeep. The other one, obviously, I think within the larger basket of infrastructure stroke manufacturing, our own sense is that I will look out for both these numbers, KEC as well as others, engineering. KEC, decent set of numbers, very strong order book. Management is very, very optimistic, not just in terms of the internal T&D segment, but the overseas T&D segment as well. Margin performance and execution would be top notch. Similarly for Azad, I think strong delivery in terms of execution, the huge market size that energy, aerospace probably provides, and the critical components that Azad provides to the industry as a whole. They're very, very confident in terms of notching up significant amount of earnings growth, significant order wins from Mayor Dukes. You've got significant order wins coming from the previous quarter as well. And therefore, I think a part of these market segments, in our opinion, can hold up as far as earnings are concerned.
Azad, Paradeep, as well as KEC. Got that. Mayuresh, request you to stay with us. We'll just wind down the markets and we look forward to your views on markets forward. For the time, we just want to pull up a couple of intraday charts. Manappuram Finance should come up for you on the screen. The stock was down close to around 2% when we started off the show. In the last few minutes, it's seen a big bounce from the lows of the day. So I think you should pull up Manappuram. Vare Energies as well, that stock as well has seen a big correction from I think 3,700 rupees. It's come down to around 2,750 this morning. And from the lows of the day, it's seen a bit of a bounce on that one as well. So Manappuram, Vare as well has seen a bit of a bounce in the last few minutes. And from the other FNO names, you have SBI Cards, big underperformer last few years. But that stock as well has popped up. But let's wind up the markets for you then. Intraday basis, the Nifty went ahead, breached the 200 DMA, but on a closing basis, we have managed to end somewhere around that. Accounting for averaging, I think we'll be a little bit below that 23,600 odd mark. The Nifty Bank, the final weekly expiry played out today. And on that one, it recovered close to around 400 points from the low point of the day. The problem is, even after the 400-point recovery, well, it still goes home with a cut of around 850 points. The top losers on the Nifty, you had Hero MotoCorp. UBS joined us earlier today, and they have a bit of a negative view on this stock in particular. It was down 4.5%. Hindalco, 3.5% lower. Mahindra & Mahindra as well did see some selling. Few stocks that ended in the green. Britannia, 0.5% higher in today's trading session after seeing a clonk of more than 10% in the last two sessions. From the broader markets, JNSC, Strides, Metropolis, NCC, frontline names losing 5 to around 7% of the market capitalization. And on the flip side, Alcom went ahead. I think they upped their guidance. They've given a fairly healthy outlook for the remainder of this year. So that stock went up with a gain of around 1.5%. Well, on that note, though, we'll have to wrap up on this edition on Closing Bell. But you stay with us because Markets Forward comes up next.